While the market has fallen, I mean, you won't say that it's cracked or we are down 3-4%. Whereas, some would expect that 58.81 on the rupee should call for that kind of a decline. My sense is that what's beginning to get priced in is that maybe this rupee depreciation is good for the market, and it will automatically reduce the quantum of imports, improve exports. So current account, by virtue of this depreciation, would come under control, and maybe you won't need other things to play in. So that being said, the idea here is that even if you do take short positions, don't try to play for large gains. I think this is a market which is showing poor follow through most of the time. So idea should be to play on both sides. So IGL is a buy with a stop of 285, target of 302. Bharti is a sell with a stop of 281, target of 265. CESC is a sell with a stop of 341, target of 324. And MRF is a sell with a stop of 15,200, target of 14,500.
Well, I remember the last 10 days I've been singularly the only analyst talking about all sell ideas. I'm happy things are working my way. From the index perspective, I continue to believe with Ashwini that we shouldn't go all out short, especially on the futures. So I've been trading probably short on the options, probably by selling the 5900 calls. I still feel that before we actually break down 5750 on a closing basis, we aren't really in a bear rally. But given the momentum that we are in, my top three ideas are all sells. The first sell call is on JP Associates, which is for a target of 57 and a stop loss of 77. The realty space overall is the most vulnerable when it comes to the index being negative. Last week I had mentioned DLF. At this point in time I'm mentioning JP Associates, which is also getting added to the shorting candidates. On the 22nd of March we created a short of 62.20. I think we're almost there, and if that breakdown happens, 57 will come almost instantaneously. The second sell call is on BPCL, which is for a target of 350 and then 340 and keeping a stop of 405. In this case, we have been in a sideways to a downward pattern for quite some time. 365 is precisely the level of support, and that I think with yesterday's closing has been punctured. So 350 shouldn't be a problem. The third sell call is on State Bank of India, which is for a target of 1995 and then 1982, keeping a stop loss of 2072. In this case, I feel State Bank is the weakest of the frontline banks which has been trading, and the breakdown has also happened on the backing of very strong volumes. So the short-term support of 2005 was broken yesterday intraday. So given that situation, I think State Bank continues to remain negative.
Well, my view is that the decisive breakdown which we have been talking about for the last 3 days has come, and over the next couple of trading sessions I see the Nifty below 5700 or at least nearer that. I have a sell in ICICI Bank, stop loss 1110, target 1050. The second one is a sell in BPCL, stop loss 371, target 345, and the third one is a sell in a Hindalco, stop loss 101, target 93.
Looking at the market scenario, I think that 5800 is a very strong support for the market, 5800 to 5780 levels, where the 200 DMA lies. So looking at the market scenario, I think that I've come up with a 2 sell call and buy and 1 buy call today. My first pick is sell IndusInd Bank with the price target of 470 and stop loss is 500. If you look at IndusInd Bank on an hourly chart, the stock has formed a lower top and lower bottom pattern, and a trendline breakdown has been witnessed with a strong volumes. So I think the stock may retest its 50-day moving average, which comes at around 470 levels. So I've recommended to sell this stock with the price target of 470 and keeping a stop loss of 500. Second sell call is Bata India with a price target at 850 and stop loss is 900. If you look at Bata India on a chart, it is in an overbought zone. This month it is up at around 8%, and in last 2 trading sessions we have witnessed a long unwinding position with a decrease in open interest, and the momentum oscillators are also showing a negative crossover. So I think that we may see a selling pressure at higher levels, and the stock may retest its 200 daily moving average, which comes at around 850 levels. So I've recommended to sell this stock with the price target of 850 and stop loss of 900. And my third pick is HCL Tech a buy call with a price target of 785 and stop loss of 755. If you look at HCL Tech on a daily chart, the stock is trading about its moving averages, and the upward trading trendline breakout has been also witnessed with the strong volumes, and momentum indicators like RSI is also in a buy mode, which indicates a up move potential. So I think the stock may go up to 785 levels. So I'm recommending to buy with a price target of 785 and stop loss of 755.